former Federal Reserve Chair for Supervision, Randy Quarles, joins us now. It's good to have you back. Just on that point that Steve left it on the politics, and I guess it's good that people don't expect the Fed to be political. The Fed goes to great lengths to state its independence and to prove it. However, we talked to Vince Reinhart yesterday, who's at BNY Mellon now, formerly at the Fed, and he said they might not talk about it, and it won't come up in the minutes, but it'll be on all of their minds that if they wait for a rate cut in the third quarter, that is going to be perceived, or at least there will be headlines about the Fed cutting into the election. Do you agree? You were at the table. Do you think that's fair?
I think that if people could be in that room, they would be very pleased to see the lack of politics in the discussions, and that affect the decisions that people are making. Obviously, the fact that there's an election going on, the members of the committee won't be unaware of that, but it really won't affect their decisions about what they need to do with respect to monetary policy.
How confident do you think they will feel that inflation is moving down to their target at this point, after what we saw in January and February?
I think right now they should feel confident that it's moving, but it's not moving at the rate that would be necessary for interest rates to come down as quickly and to the degree that markets are currently expecting. I think that there's frequently in market assessment of the Fed's likely policy path a view that, well, 2% was a rather random or at least arbitrary target, so they don't have to get down to 2% before they can declare victory. They could declare victory at 3%. And that's just not how the Fed is going to think. They don't have to get all the way down to 2%. But if inflation remains higher than their target, materially higher than their target, they just won't lower interest rates as quickly as markets are expecting. I think it has to get closer to 2.5 as opposed to 2.9 before they can say, now we can start lowering interest rates.
Well, 2.9 is core PCE, so it excludes food and energy. If you factor in food and energy, which people do, it's at 2.4%, the year-over-year PCE number. So how close does it have to get?
Well, the Fed's stated target is the core PCE rate, and that's what they'll be looking at. And because food and energy are relatively volatile and don't really reflect sort of the effect of monetary policy, they affect other seasonal or market factors. So they'll be looking at the core PCE rate, and they'll need to see that come back down closer to their target.
So when do you guess that will happen? When do you think the first rate cut comes? Markets now circling around June.
Certainly not before June. And I think that it's possible that if we don't see further progress on some of these measures that the Fed has been very clear that they're focusing on, the measures of tightness in the labor market and the inflation target, that you might not even see a rate cut in June. So I would say that the current market expectation, I think, is for 3 cuts weighted towards the end of this year. I think 2 is more likely, given the way that I expect the environment to evolve over the course of the next few months, and it's possible that would mean that there wouldn't be a cut even in June.